All right, so stocks finished the day on a sour note. It seemed like it was trying to bounce up earlier this morning, twice actually at the open, and then later in the late morning, and then finished the day on the lower end. Probably will get that bounce tomorrow, going into the end of the week here. So we're going to break down, just how bearish we are, and then what to expect out of any bullish bounces that we get. Again, as soon as potentially tomorrow and Friday. So we'll break down the technicals, see the trending indicators that we're seeing thus far and what they tell us, and just how long or how bearish we should expect to see. Big drop in safe haven asset classes today. Again, another reason why we might get a little bit more of a short-term bounce, not only from a sector standpoint, but also from a couple major asset classes that typically coincide or typically rise along with risk aversion, but they fell today. So we're going to break that down, take a look at what's going on. And then our trade idea is a stock that's on its own little bullish trend, but has been pulling back. We'll talk about how to trade it, considering it's a pretty rare pattern. So we'll talk about how to trade that. So let's go ahead and get started. Today is Wednesday, April the 27th, 2022. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. We finally got the red line on the moving average. So we have dark pink shading and a red line now. The intermediate line is crossed down below its market sentiment line. It's easily in bearish territory now. It's almost in reversal zone. In fact, it came that close to a cluster with all three lines, just barely not including the market sentiment line. The market sentiment line is almost in bearish territory. You can see that we did close a second day below that 23% retracement level, but not very significantly, not any more than we did over here. So I wouldn't necessarily say that we're breaking down, because this is an important support level for the S&P, and we haven't really broken it yet. Obviously, we're on the verge. I expect that we'll come back up first, though, and bounce up before, probably hit around 4,300 or a little bit higher before we eventually work our way down below it. But we're down 6% below the moving average. That's about, in the past has been a limit. In the recent past, it's been a limit as to how far down we've gone. We can stay down there, but it's hard to really extend further away from the moving average when you're this far already below it. When you look at the NASDAQ 100, again, very similar. We did get a cluster on the NASDAQ 100, all three lines down there. Short-term sentiment, very bearish. You can also see, too, we're 9% below the 30-day moving average, which, again, is about as low as we were back over here. Again, that doesn't necessarily mean that we're going to bounce up to the upside. It just means that we're, very oversold right now. Let's take a look now at the Russell. And you can see the Russell 2000 also got a cluster today. Got the down not as big of a range, below average on the range. The market sentiment line is in bearish territory for the Russell 2000. We are 7% below, not quite as far down as we were here in late January, but still a pretty significant cluster, a signal. We are at a very important support level here at this 38% retracement of the long-term rally. You zoom out so you can see that move. There's the move. There's the long-term support, and as well as the 0% line. Here, the 0% line of where this is drawn to right there, the low point from February 24th. We're kind of flirting with getting below that, but not quite breaking it. Again, very similar to the NASDAQ 100, flirting with breaking down, but not quite breaking down below it. All the major averages here have short-term sentiment lines extremely low. They're all in the 10th percentile. They've all been in bearish territory and oversold levels for multiple days in a row. So the expectation is that you'll get a bounce out of here. The question will be how far up it goes, and whether it gets, again, if it gets this kind of peak again, this is a very bearish near-term peak. We talked about that before. That's the when you've been down for so long and you bounce up for a very short amount of time, and you only get into bullish territory or maybe a toe into upper reversal zone, and that's it, and then you come right back out of it again, especially when it's a lower high compared to the last near-term peak. Then you're looking at a bearish, a new bearish near-term peak. You would expect, just like we did here, a new lower near-term low point to form out of it. Now let's take a look at the weekly chart here. So let's give one look here. The weekly chart, you can see again, earlier this week we had a bearish candle staying there, and since a bearish close now, we are closed. The Hakinyashi close is below last week's low point, and obviously your 10-week is finally, for the first week, crossing below the 40-week. When you look at the NASDAQ 100, we already got that bearish crossover multiple weeks ago, and again, bearish candle also closing below there. And then your Russell 2000, same thing, you're getting a bearish candle closing below the prior week's low point. So very bearish Hakinyashi closes here on the weekly charts. Falling PPOs, bearish differentials, red line, we're below the 10-week moving average. It's now below the 40-week on all three of the major indexes. If you look at the three red arrow charts, three green arrow charts, we have three red arrows across the board, including on the Dow Jones now. So pink shading all across the board, multiple days in a row. Looking at the two-line versions of the MACD and stochastics, you can see we are well below the 8 and 17-day moving averages. They are both well below the 30 and dropping sharply. And then you can see the 30 and the 50. If you can barely kind of see the 50 there. But the 50 is right there. You can see the 8 and 17-day have now crossed back below the 50, right? And the 50 is below the point of control, and you would look for the 30 to eventually cross below the 50 as well. And you can see that important. See, this not only is it an important retracement level, but you also got the bottom of the value area for the past year at that level too. So you can see how important it is for us to see if we're going to be breaking that level or not. Now let's take a look at some of these other oscillators, like the directional movement index. You can see is at breakout levels on all three of these, the S&P, the Qs, and the diamonds, breakout levels on all of them. So trending levels, I guess would be a better way of saying that. The trend strength indicators are now at intermediate strength trends. Again, for all the indicators, they're all below this -2. They're all above 65. So really close, and all below the cloud. We're really close to a mature bearish trend on all of them. Looking at the RSI and the CCI, they all look like this. They're all below -100. They're all below the 40 levels, so bearish trending levels from that perspective. And then when you look at the Bollinger Bands, especially with the Keltner channels, you are below, oops, excuse me, let's do it this way. There we go. We are below the lower Keltner channel and above the, in between the Keltner channel and the band, and that is a trending pattern as well. Finally, one more, one that we've been looking at here lately is the Hull moving average, and you can see very bearish pattern. And no, I mean, we can get a little bit of a bullish bounce, but I do not expect this to be bullish anytime soon in terms of going up for a while, right? With the parabolic stars way up there, the candles are really bearish, good strong bodies. They are kind of slowing down. We've got a couple days in a row now where the Hakinyashi close did not get below the prior day's low point, but we are still below the 20-day Hull. So watch for us to reverse above that Hull before it turns green. And even when it turns green, considering you're below a falling 200-day Hull, I wouldn't be too concerned with, with any bullish turn, at least for now. When you look at the volatility index, volatility did rise. It did not rise above the 100% mark. It kind of got a little bit above it yesterday. It came right back down below it today. So the VIX was actually down quite a bit today. So it's still not at levels. It's not even to 105. Getting to 105% is typical of just a normal intermediate pullback, which this has gone beyond. But you notice we still haven't this whole entire year including after Thanksgiving, we still haven't closed to 105%, much less higher. If you go back to, again, all of the major corrections, we got above 125% of COVID. We got it to 125% in fourth quarter of 18. We got to 125% at the beginning of 15-16 correction. And we got to 125% of 2011, the beginning of that correction. So all these corrections either got to 125%, at least 105%, either at the beginning or at the end. And that's, since we didn't get it here at the beginning and we still haven't got it the whole time, it means that a volatility jump like that is coming. We are going to get one of these kind of crazy bullish, like this one, or like this one in 15 and 16, or that one in 2011. You notice we haven't had one of those expiration cycles where it's just insanely bullish, and we end up closing near the high of the volatility during that section. So, but you can also see we're gradually moving higher, very similar to 2007. We're kind of gradually moving higher on volatility there. When you look at the today's volume and trading range, I told you yesterday or Monday's volume wasn't really enough to be like so extreme that we're going to be bouncing off here. Today's volume wasn't so crazy either. 122 million shares trading hands. The range was just under 8 points, so actually below average on the trading range. So when you look at the trading range at under 8 points and the volume here at 122 million, again, both those numbers are above those lines, those averages, to keep them up or moving up, but not so extreme, and off the charts that we would immediately bounce right off of that, off of this low point and just take off to the upside. Now, can we bounce? Yes. Can we get a little short-term jump higher? Can we get a green bar on this again? For sure. I wouldn't expect huge green bars. I wouldn't expect trend-changing green bars. But we are going to get, when we get these big down days, you're going to follow some up. You're going to get some green bars following up too. But I don't believe that we'll be breaking through those moving averages and trending to the upside anytime soon. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section, especially if you disagree. What charts or indicators are you looking at that suggest why you're either a lot more bullish than I am or a lot more bearish than I am? Before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. You liked our video today. You want us to do another video again tomorrow. Quick way to give us feedback if you like our stuff. Of course, if you don't like it, you don't have to click on anything. Also, while you're down there, comment what stood out to you in today's video, what questions or comments you have. Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our website, check out some of these things over here on the right. Click on this icon. It takes you to our Market Outlook live page. This is where I do every Monday, Wednesday, and Friday at 3:30 Eastern Time. I do a quick little 10-minute or so video where I take a look at the trades that we've done in prior market outlooks to see whether we should stay in them or get out of them. We also put on today's trade idea already, the one that you'll hear at the end of the video. We already put it on today in our little portfolio, in our class portfolio. You can see all of our upcoming or all of our archives here as well. Come over here, you can see our upcoming classes. Click on View More. You can see our full calendar with all of our recordings, upcoming classes. This by the end of the week. Next month's calendar will be posted and updated there. Come down here, click on this heart icon, takes you to this tab, hit that like button. Same thing with the thumbs up icon here, click on that, it takes you to the Facebook page. And you just come down here and click on that like button right there. Again, the more you do that, it helps get our content out to more of our followers, gets this number up higher based on how their algorithms work. It also benefits you because Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here while you're watching. All right, now let's take a look at what's driving the price action today. And you can see it started off as a pretty much risk-on day. Emerging markets started off really strong. Merchant markets stayed strong throughout the day. It was U.S. equities, whether it was the Qs and IWM that started off relatively hot, fell down, rallied up to the highs of the day or in the middle of the day today, and then came back and closed near the lows, closer to the lows than the highs. Long-term bonds stayed down the entire day today, so yields rallied. You can take a look at not very much of a trend changing though. Like the bonds have been kind of basing here, and you can see we kind of rallied up a little bit up to this 2.18%. So 5 basis points almost in the 10-year yield. But if you look at like TLT, it's still, it hasn't changed direction per se. It's still on this bearish mode. It's back below its 8-day moving average, but it never really even got above the 17-day yet. That's when things will start to change, especially with the MACD currently trading up above its moving average. You can see gold is really dropping right now. Gold is trading in between the 50 and 200-day moving averages. These 8 and 17-day averages, you can see, have crossed below the 30. All three of them are crossing below the 50. The MACD is bearish and dropping with a histogram that's down there. You can see there's not very much volume here. Seems like we've broken a shelf of volume, headed towards that 200-day moving average and filling in the rest of this gap. It's a pretty sizable gap to do that. So it seems like your safety trades are still kind of struggling. I remember the euro right now and the yen are the safety trades. They're still struggling too. So there's the euro still in parabolic mode, and then you can see the yen is still in parabolic mode. It's really gone to the upside. So normally you would consider the dollar to be, or right now these two particular currencies are your safety trades. And pretty much all of your safety trades pretty much dropped today. Bitcoin rallied a little bit, but still below its 8-day moving average, which is both the 8 and 17 have crossed below the 30 and the 50. So they're both still on bullish trends, and you're kind of flirting around with this point of control on Bitcoin. But it's the safety. The story of the day is the safety trades still really dropping pretty sharply, and that doesn't necessarily mean that the S&P is like taking off to the upside. In fact, the S&P finished closer to the low than it did to the high, right near where it opened. So you wouldn't necessarily say that this is a risk-on day until you actually look at those risk asset classes, in particular bonds and gold, and then, like I said, the euro and the yen from a currency standpoint. When you take a look at the sector strength and the sector, how they performed, again, just looking at today alone. So we'll come out to April 27th and just look at today. You can see your safety trades were the ones that came down: utilities, real estate, healthcare. And of course, Google weighed down on XLC, but that will be very short-lived, as Facebook was pretty strong with its earnings. And you can see XLK, Microsoft helped keep XLK higher, along with materials and energy, which again took advantage of the dollar and the safety trade and commodities rallying. Like I said, the other end of the spectrum is utilities and real estate, really lagging behind healthcare as well, lagging behind a lot of these other cyclical areas. XLP is still holding on to relative strength. It's got the benefit of those dividend payments that are, this DVY stock is very much in demand. These types of stocks are very much in demand. When you look at DVY here and compare that to just the broader S&P 500, you can see it's still moving higher. Right? The relative strength on this daily chart still moving up to the upside, which means we still have demand for these dividend stocks. Like, there's safety, but there's not so much overwhelmingly safety that the market can't still kind of pick and choose where it wants to park its money in a rising volatility environment. All right, so for our trade idea of the day, I wanted to take a look at IBM. IBM has been pretty bullish. It's a pretty decent pattern. Dark green shading, green line, well above the moving average, almost got 10% above it. We've been pulling back, and we have light pink shading. We don't have light pink shading, yellow line, but short-term sentiment did drop in the oversold territory. Now it's a matter of how much will bounce, especially considering we are near the gap where this kind of post earnings gap. We're near, even if we do fill it in, you're still going to be above the moving average for most of that filling in there. When you take a look at its long-term chart here, you notice you got a bullish candle, but we didn't close up above the prior week's candle. So you notice we're kind of still sideways and have been sideways for so long on this stock. Looking at some of the other charts, you're centered around a point of control with this pullback. Right now, as you're approaching below the 8-day moving average and the MACD histogram is rolling over, your RSI and your CCI have dropped down into neutral, back down to neutral levels with the pullback. You can see IBM saying we're above the cloud, but we don't have a trend going. We had the weakest of weak trends going right now, being below -1 and above 50. We have a weak bearish trend, but obviously how much stock you're going to put into that right now, considering how bullish the stock is. And then you take a look at the Bollinger Bands. We got outside the Bollinger Bands. We really broke out to the upside. You would think, okay, this is going to be pretty darn bullish, but now we are back in the middle of the chart on the Bollinger Bandwidth. We're not maintaining those breakout levels, and we're just kind of trending or trading back down inside the value area for the past year and centered on that point of control. So what I decided to do was to sell an iron condor, to sell a bull put spread at the low 20 deltas on the put side. Come over here and sell the low 20 deltas on the call side as well. This is what it looks like with regular position sizing, and then you can see when you set those slices to the charts. That's a pretty good chart. I mean, pretty much the entire value area for the past year is sitting inside those break evens as you're kind of hovered. And we don't have to have earnings, so we're kind of hovering here in the middle of that range, again with the point of control right smack dab in the middle of that range. So that does it for tonight. There's our market outlook trade idea for the night. All right, well, that does it for me now. You've heard from me. Now I want to hear from you. Use that link popping out in the top right corner of your screen that takes you to our Market Outlook forums. Open up any new thread there with any questions or comments you have. Reply to anybody else's thread. Let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Like us on Twitter and Facebook as well as subscribing to our website for free at marketscholars.com. Have a great rest of your Wednesday night, everybody, and we'll see you all next time.